Welcome back to Business Deals and Real Talk with the Choes. I'm your host, Holly Che, and joining me today is my co-host, Johnathan Che.
Hello.
Well, today, hi, Jonathan. Today, we're diving into SBA lending and what it means for business buyers. Our guest today is Lance Noel. He's the Senior Vice President of Commercial Lending at United Midwest Savings Bank. I believe Lance has over 15 years of experience in SBA lending and commercial lending, specializing guiding entrepreneurs through the complexities of business acquisition. Is there anything I'm missing out, Lance?
No, that was perfect. Thank you guys for inviting me to do this. This is awesome. So thank you so much.
Well, thank you for joining us. So, Lance, let's start with the recent updates to the SBA Standard of Operating Procedure. What are the key changes and how did it impact our potential buyers?
Yeah, so those are great questions. We get those a lot. And so in 2023, they made some significant changes to the SBA SOP guidelines. Some of them, pretty important. And then what we're really seeing is that a lot of these rules, they just switched back to what they were originally. But then there are a few that are important to talk about, because not only did they kind of switch them back, but they even took them maybe a step further in the other direction. So those are the ones that are going to impact people the most, because if they were kind of looking at a business in the last 18 months, because let's face it, sometimes it takes a while. They're looking at business under, they're looking at it under a certain criteria if they had talked to a lender, working with a lender, and then that landscape changed. So a couple like the significant ones, I might as well say too, the reason these changes came about again for 2025 was for the first time in many, many years, probably first time since I've been in SBA lending, the SBA actually lost money last year. They had more defaults than they have in a long time. So they lost money. And what they found is one of the big reasons was they stopped doing the SBA fees. Each loan has an SBA fee that just kind of, it doesn't necessarily cover well, I can't say that because a lot of these fees are pretty big. I always have to explain to my borrowers that, hey, look, it is what it is. It's unavoidable. But now we're seeing why that they were in place before, because it was a little bit of way of collectively over all these loans collecting fees that could cover losses. And so, but up until in 2023, they changed that rule to where there was no SBA fee for loans of $1 million or less, up to $1 million. So $999.99 or less was no fee. And now it's back. They've changed it back to where every loan has an SBA fee, and there's a calculator for it and all that. But that's one of the big rules that is going to affect people immediately, because it makes your loan, these fees are put into the loan. And so you just right off the bat, your loan is a little higher than what you expected. You're buying a business for $1 million, and next thing you know, there's, $40,000 fee or, $25,000 fee added to it. But that's one of them. And this was another one that was big because a lot of people jumped on it, was the partial ownership. You could sell a part of your business to someone. Like I own 85% of my business, and maybe I want to sell to my 15% partner. Maybe I want to say, hey, I'll sell you 70% of what I own. Then we'll kind of switch ownership. I'll be 15, you'll be 85. Well, now with the new rule, you could do that before. And it kind of fell under the rule of the SBA, which anybody under 20% ownership does not have to guarantee the loan. Now, even if I sell 99% of my business and I keep 1%, I still have to guarantee the loan for at least 2 years. So that's a huge one, because a lot of people took advantage of that. That one there, I'm a little mixed on how I feel personally, because I do feel like, especially like in family-owned businesses and stuff like that, they obviously had a reason why they changed this and made it where if I sell a majority of my business, I still would have to guarantee up to 2 years the loan, even if I'm under 20% owner. So that's a big one, because a lot of people took advantage of that. In fact, it's funny about that one is it seemed like just when people started to really, really understand it and take advantage of it, then they changed it back. Because I know with my bank, the first several months we're like, we're getting a lot of inquiries about it, but we haven't done it yet because we're just not sure how it all kind of works. So, but anyway, now it's kind of, but I will say this too on that one. Before, there really wasn't any type, you had to help sell 100% of your company. So at least you're still able to sell a majority of your company, but now you just have to guarantee the loan. So, at least it's an option that wasn't even remotely available before, but, so that's at least a good part of that one. And then probably the last one another one that's kind of big. I have two more that I'll say. A lot of these businesses, they'll get MCA loans and factoring loans, and they kind of see them as a short-term cash flow. Like, let me just get the cash quick. I'll refinance it down the road.
I heard about those.
Yeah. Now you cannot refinance those at all under the new SBA rules. Those will not be refinanced. So.
Oh, probably because of the risk factor, right?
Yeah, and honestly, not to disparage any of those companies doing those types of loans, especially factoring. I have friends who do the factoring product, and it's a good product, but yeah, they just see it as kind of risky, and so a lot of banks weren't really open to those anyway. But I know other banks and other lenders, friends of mine, they would do quite a few of those like MCA refinances and stuff. So, but now they can't do them at all. They're not allowed. And then the other one that's kind of a big change, but it went back to the way it was originally, was the injection. Up until the change in 23. Somebody had to come in with 10%. They had to at least come in with 5%. The SBA rule is 10% injection, but the SBA did allow for a 5% injection if the seller would carry the other 5%, but they had to do it for the life of the loan. So in most of these cases, the loan is 10 years. So they could not get paid a single penny on that injection for 10 years. The 2023 rule changed where they were able to do that same scenario with the seller note of 5% to meet the 10% injection requirement. They only had to wait 2 years on 2-year standby. So that has changed all the way back, because I did have a lot of people who took advantage of that one as well, because it was obviously it's really good for the borrower, but it also, the seller was the one who had to be like, well, man, do I really want to be waiting 10 years for this? And so now we're back to where the seller's still allowable, still happens, still do loans with it, but it's not quite as people just jumping on that one like they did, from 23 when the rule changed in 23.
Yeah,
but those
I
are the
think
major ones.
those two last changes really impacted my qualified buyers who were able to buy businesses in the past, and now that hindered it a little bit.
Yeah, for
Hey,
sure.
Lance, just a point of clarification for some of the folks who may be a little bit thin on cash after their down payment. So the SBA fees are generally about 3 to 5% of the loan amount, roughly.
Correct.
So that can be a substantial amount. Now, does that SBA fee have to be paid by the borrower in cash? So do they need to do that, bring cash to the table for those fees? Or can those
I'm glad you asked that, because I do get people panicking about that. But even overall, just the total fees are like, what, but every bank I know of and the SBA allows for those fees to be rolled into the loan. So how it works. So like if you're buying a business for $1 million, I'll use that because it's simple math. And let's say between the SBA fees and closing costs of your lender, let's say you're up to $1,075,000. Well, you have to bring in 10% of $1,075,000 versus just 10% of 1 million. So incrementally, it's only a few thousand more towards your injection. But there's still, like you're saying, it's a little bit of sticker shock, especially if they think they do have to pay it out of pocket. Because I've had so many people go, do I have to pay that now? And it's like, you don't have to pay it technically at all. You pay it off in the loan. So you pay it off over time. So great question.
And a good way for buyers to sort of think about that, because that is the cost of doing business. As many of our viewers may or may not know, the SBA guarantees 75% or 70% the loan amount. So it allows for a lot of people who are looking to get into business to get financing that they otherwise would not. So it should be taken a look as a cost of business, and their debt service, their payments only go up slightly.
Oh, it's insignificant
with those fees. So,
yeah. I've been doing this a long time, and even I would look at sometimes the SBA fee going, gee, this is ridiculous. Well, now that I learned, like, because they did, one of the reasons that they lost money last year is because they didn't take these fees. Well, now I get it, because this program, again, also, I'll be one of the first to criticize government programs and a lot of just big programs that are out there spending money. But I've been involved with this one for a long time, and it's a program I'm proud to be a part of, through a lender, obviously, but because, like you're saying, I don't know how people would just go and buy a business. This isn't the 1940s and 50s anymore, where you can handshake and you get a loan to buy a farm, or buy a tractor. Things have changed so much over all these years that without this program, it would be impossible for people to buy businesses. Really, I think it's the number one way. I mean, the other thing about it, and there's my talk. So the other thing about it is small business owners are the number one employers. They're the number one overall employer of our country. So it also creates jobs and keeps jobs. And so it's vital to our economy. So it's something I'm really proud to be a part of. And then also, like, these fees, I see why they're there, and it's an important part of the program as well. to keep it going.
Yeah, and it sounds like it minimizes the risk, to the state program as well.
Yeah.
So thank you so much for that. So let's now get practical, Lance. So what are the do's and don'ts for buyers seeking SBA financing in this new environment, I guess?
That's a great question. It's really, number one, work with a really good broker. You guys are essential to the whole process. You guys are, you can help match a good borrower with something that works for them. You guys also are you guys also are studying these businesses yourselves. You're using really good formulas and stuff that, let's face it, you do a lot of the legwork for them. You might represent the seller, but if the business doesn't sell, then you're not representing anybody, really, So you guys to really do your work. That's one thing I always strongly recommend doing, working with a broker, but then also working and interviewing your lender as well. There's a lot of banks out there that, you need a seasoned lender. Let's face it, you need somebody with experience. My bank, and that's one thing that's been great about working with teams like yours, is I strongly encourage, as soon as you feel like you have someone, or, someone feels like they're ready to kind of jump on to make an offer on a business or something, you get them in contact with a lender who can make sure, kind of pre-qualify everything. The business, is so many people say, well, will I qualify? It's like, well, I'll be honest with you. We don't worry about you qualifying. If business qualifies first, that's where we start. We look at the business you're going to buy, and if it meets all our criteria, meets all our ratios, checks all our boxes, then we look at you, and that's when we underwrite you. But we start with the business. You can be strong as heck, but if the business doesn't cash flow or it has issues that a lender may not like, well, then it stops, So definitely get involved in the process of the loan part of the process. And in fact, I had a great example. I've been talking to this person for 2 weeks, and they've been vague in their answers and getting me information. End up talking to them. They have no money. So you need to talk to a lender. And they were a little surprised at this. A government loan required you to still put in money. So it's like, yeah, maybe you kind of wasted everybody's time. Had you asked some questions up front, gotten your information to everyone, then maybe you could have had a more realistic expectation for everyone. So that's the one thing, is just ask a lot of questions to the sellers, the brokers, and the lenders. And also know that each lender is different. I get a lot of people who are like discouraged because, I talked to this bank and it's just, they don't really do it. Well, that's one bank's opinion. Some people like Fords, some people like Chevy. It's just, everybody has their own things, their own appetite for things, their own likes. My bank, actually, we do not do gas stations. So if somebody calls me up, well, great, what industry is it? Oh, it's a gas station. Sorry, I don't do gas stations, but here's some that do. We also don't do restaurants. So getting engaged with the lender is a pretty important part of the process. So
to unpack what you were saying, so it's really important to look for businesses that are SBA pre-qualified, right? Because that's half of the puzzle.
Yeah, I think so. Yes, I feel that that's very important to at least have that safety that an SBA lender has looked at either the business or the industry or the whole combination and said, yes, this works. It doesn't necessarily mean it'll get approved in the end. Some things can come up. It's an initial analysis that says, yes, this everything looks clean and good and works.
And when you are assessing the buyer's eligibility, what are you looking for?
That's a great question. And again, each bank is different. I kind of really start with their PFS, their personal financial statement. If they don't have a lot of cash on there, I want to know where they're going to get their injection right away, because if they don't have a good answer for that, then that's going to be a struggle to overcome. I also look at their personal income, which if they are relying on the business to be their source of income, because there are situations where we allow for people to purchase a business and keep their current job. I mean, everything has to make sense. It has to pass the smell test on that. But that's a totally doable scenario. But there's also many scenarios where it's like, I'm going to buy this business and I'm devoting 100% of my time and life to this business because it's going to make me enough money to do it. Well, there has to be enough in the ratios. There has to be enough money left over after the expenses are paid, and most importantly for a bank, after the loan is paid, to where you can afford your personal debt, because that's when we then look. We call that global debt coverage. We start with the business debt coverage. Does it meet our ratios and our requirements? Then we do a global, meaning all combined, the business and the personal, all that debt has to be covered at its acceptable ratio as well. So if somebody, there might be awesome to have really good debt coverage, really good ratios, but then the personal debt is so high that it drags our ratios down. So we start with the PFS, tax returns, and then lastly, then it comes down to credit, personal credit. And personal credit is one of the easiest ones to look at first, because we try to stay 650 or above for credit scores. If there's short sales or bankruptcies, they can't be too recent for us. It's got to be long. It can't be any more recent than 4 years. It has to go beyond 4 years. And then there also needs to be pretty good explanation. You can't say you can't addicted gambler. Well, that's not going to work. You have to have some. COVID hit a lot of people hard. We get it. 2008. Boy, there's a lot. We'll see that for times to come, but it's further in the rear view mirror. But 2008 was a big hit for people. A lot of short sales, a lot of foreclosures, some bankruptcies.
So in this initial requirement, are you asking for like resume? Are you assessing the transferable skills with the business? Is that all?
That is a great question. And that one there, I've been doing this long enough and I've worked for a few banks. So some are like so focused on direct experience. And then you have other banks like mine that we call it translatable, transferable experience, where you might not have done something exactly in HVAC or something like that, but you have all the skills that will allow you to be successful in that industry. And so, yes, absolutely. I think a business plan is hugely important. And I think when people kind of just like do it to check the box, they want a business plan. Let me throw this together real quick. I think they're missing a really crucial piece of information. If they focus really good on a business plan, it means so much. If they just explain that they understand the business, like I've really done my homework on the business. Then if they understand, and also here's how much I know about the industry, and then brag about yourself to almost nauseating. Just put down as much as you possibly can about how great you are, because most people, let's face it, they're kind of modest. They don't really like talking about themselves, and that's when I always say on your personal financial statement and in your business plan, show me how strong you are, financially, wealth wise, and show me how awesome you are at skill wise, experience. Just because you weren't on a plumbing company before, you were in the military, and whatever you did that you're proud of, I want to hear about it.
That's helpful to know. And then does your bank also suggest or recommend financial projections?
Yes, and those are required. Mm-hmm. And what I always tell people to do on that is start with, because that's where you'll get into like, oh geez, I just want to buy a business. I didn't know I was gonna have to, So, but I always say, look, just take that most recent P&L and just start from there. You're going to have almost all the same categories. Some of them are going to go away but in general, most of the categories are going to stay. And then you're also going to have a debt coverage that person might not have. And if you do that, then you'll simplify it so much. And you also do though you don't want to just 50,000 in sales, 50,000, so 50,000. You want to show that you are studying this business. If the business is seasonal, you better understand it. And these projections will show that you understand the seasonality, that the case may be. But yeah, definitely, those are important to, again, that's another one, Holly, that some people are like, let me just check this box and, cross it off the list. But yeah, that's another way to show that you've really done your due diligence. You've really searched and understand not just the business, but the industry. So it's a good one. They definitely need to focus on that and put some effort into that as well.
Yeah, it would make sense, right? If you're putting this much effort, you're going to help. It's going to help you become successful later.
Yeah, that's what I say, because like a lot of people, you can tell, and some of it's just, like not everybody's a great writer, not everybody, but so some people, they immediately get kind of like, oh God, a business plan. What am I going to do? Oh, projections. What do I do? When I'm like, I say, look, don't look at it as if it's, shoot, I got to do this. Look at it both as tools, like even if you weren't submitting to a bank, wouldn't you want to kind of have a business plan just so you know what your focus is? Like if I pay cash for a business, don't I still want to have my thoughts behind what this business does, where it's going to go, what I'm going to do, what are my numbers going to look like? Am I going to struggle at all? Am I going to have enough cash coming out and doing this? Those are all things people, I feel, should be thinking about, whether they're just trying to get something off a list for a bank or not.
Yeah, absolutely. I think it's important to have that plan. Yeah. So now that we have all the do's, what are the don'ts for buying?
Well, that's a great question. Let me think about that one.
While you're thinking, this happens way too often. We instruct our agents to have a conversation with the buyers that while they're in the lending process, don't go buy that truck. Stop spending money.
Yeah.
Yes. Wow. Okay. That's a great one right there. So yeah, a couple don'ts that in fact, thank you, Johnathan, because that kind of reminded me of another don't as well. But yes, it's first of all, what people don't understand about buying a business and the SBA, a lot of people love to say, like, you'll hear horror stories about, you're getting an SBA loan. Oh, geez. Well, what they're comparing it to is buying a piece of real estate, which is just there's similarities, but they're also so completely different, especially when there's no real estate involved in most of these businesses have zero collateral. I mean, they might say, oh, I got X amount of inventory and X amount of equipment. Well, banks, they discount that so much that it's really not worth it. So most of these loans really have no collateral. So of course it's going to be a little harder process than when you know a house, you're doing an loan to value on a house. The first thing, one of the don'ts is don't get frustrated and impatient with a process that is completely different than what you're probably comparing it to, which is buying a car or buying a house at least. And then what Johnathan touched on, it's like, now this is where it's like buying a home. You don't want to go buy a car or a boat a week before you're going to close. It is, everything kind of needs to, they base their decision off of a scenario. And if that scenario changes, like when you buy a home and you quit your job or you buy a car at the end, it can screw up how get closing, and it also kind of, for me, kind of gives me a bad sign. So it's like, you want to buy this business and you're more worried about buying a boat or something. Like, can we just, show me that you're focused on buying this business, show me that that's your main goal. I'm going to eat ramen noodles just to have this work, Yeah. But those are two of the don'ts. Bottom line is, you can't get impatient with the process because it is a little more tedious, but it is what it is. You just might as well. I love working with borrowers who just roll with it, because I also feel like that's a great indicator of they're going to have their first big hiccup when they buy this business, and they're just going to roll with it. It's not going to panic. They're not going to, freak out. And those are the kinds of people that I think kind of shows insight into their personality, and they're going to be successful.
Yeah, I'll give you one more don't. This is, a lot of times, I used to be a banker too. Don't delay. Get things done quickly. Get things done on time. Oftentimes, the delays are caused by the borrowers being slow or not wanting to tackle, the projections or the forecasts or whatever. That's why working with a good banker and a good broker can help you fill in those gaps that you don't know. But, sometimes the delays don't always come from the banks, so don't delay.
I'm glad you're a part of that question, because you keep reminding me of stuff. Exact question kind of stumped me. But in banking, and Johnathan Johnathan just kind of touched on it. In banking, we always say, and in lending in particular, we say time kills all deals, and it does.
We did the same thing.
yeah, because you start dragging on. A seller kind of has their foot out the door. They might not have their foot on the gas because they're kind of thinking about the trip they're going to take to Hawaii now that they don't have all this responsibility. So yes, John, that's a great one, because it drives us crazy. Where it's like, because we always say, because people will say, well, how fast can you do this? How fast can you do that? And I'm proud to say my bank is one of the fastest when it comes to, we advertise, we will decision your loan in 2 weeks or less, which is really fast.
Yeah.
Because I've worked for other banks that were like, oh wait, they just make you want to pull your hair out. But we decision a deal in 2 weeks or less. And they say, well, great, that's awesome. How quick to close? And I always say, we close as quick as you go. Because we always say, if you can't get closing done in 30 days, it probably has nothing to do with us. It has something to do with a lawyer redlining a bunch of stuff, a seller who's not responding, a borrower who's not responding. And that, if there's delays, 9 times out of 10, it has completely to do with parties outside of the bank.
And then the last don't that can hurt a deal in the underwriting is for the seller. And you mentioned it. Don't take your foot off the gas.
Yeah.
Don't retire early, because if your numbers and your revenue and your profits start declining, well, that business may not be lendable, the original loan amount. We do see that from time to time. So to all the sellers out there, you should have your best year, the selling year, and don't retire until those funds are in your check or your checking account.
Yeah.
Your savings.
Yeah. That's a really good one, because what a lot of people don't understand is if it, like sometimes, like I'll submit something to underwriting, but I might do it off of like a P&L from the seller that's like 60 days old. Well, the rule is at closing, everything has to be within 90 days. So in 2 or 3, like let's say, I got this is 60 days old. I submit it, takes us a couple weeks. Then there's some more time that has to be played out in closing. And let's say now that thing's not just 60 days old, it's 120 days old. I need an updated P&L. And if they, like Johnathan said, and I've seen it done, they're a little like, oh, I didn't really know, I thought we were kind of done with the loan approval. Well, the loan was approved, but it isn't closed until it's closed. And you absolutely have to have your financials within the most recent 90 days to close.
So I had a business. I won't say what type of industry, because I don't want anybody to triangulate, but it was a good business. been around a long time. We had a great deal structured, and I kept on asking for the updated financials, and it did take about 7 months to close. I never got them, and then a month before we were supposed to close, I said, "Hey, the bank needs this. You gotta give it to me." I took a look at it, and revenues fell by more than 50%.
Yeah.
And I met with a buyer the next day, and I said, let's try to, take a fresh look at this. You're not going to be happy. In that situation, the buyer didn't want that company anymore. He said, he basically looked at the numbers. He was disappointed. And he said, never forget it. He said, "I'm out," shook my hand, and left. The deal was dead.
Wow.
So as a seller, keep going. Keep going.
Yeah, that's a great example story right there. So
Yeah, and it's a good point because the consequences are more than just the lending process, right? The buyer may no longer be interested in the business.
yeah.
So I guess, Lance, thanks so much for that. Just wanted to navigate the process more. So with buyers who are unfamiliar with the SBA process, what steps should they take to get started?
Once I'm introduced, whether it's through like somebody like yourselves or however I get they're in contact with me, I want to have a conversation with them first before anything, just to really, because I know I'm not a perfect fit for everybody, but I've also been in this long enough. And one of the cool things about banking in the industry is there's so many of us who've kind of floated around and worked together, and now we're at different places, but we're still friends. We still talk. And so, like I said, I don't do restaurants, but I know I have tons of people who are awesome lenders who do restaurants. And so I pride myself, like I feel like what you and I are doing, like, yes, that's how we make a living, but we're also making people's dreams come true. And I don't want to be like, just, no, sorry, talk to move on. If I feel like there's a deal there, it makes me happy that I can help somebody get it done, even if I don't make any money on it, because I feel like it comes around, maybe. But they definitely need to, when they're ready. And I always say, you don't have to start the process until you get an LOI in and it's accepted, but at least understand the process, ask some questions, know what kind to expect. Because I'd hate for somebody to write a business plan and then their LOI doesn't get accepted. That's a big waste of time. But definitely they should be reaching out to a lender. And if they don't feel comfortable with everything they're told, reach out to a second or third, get enough viewpoints on stuff. Because every bank is different. Every bank has their own, like, what a lot of people don't understand is the SBA has these rules. It's like 310 pages of rules. It's a lot of rules. But then each bank is allowed to operate under those rules, under their own rules themselves. So a lot of times, and this is, you'll hear somebody we work with somebody say, "Oh, well, the SBA has this, SBA has this." A lot of times it's actually the bank who actually, they're blaming the SBA for it. They're saying, well, it's SBA, but really it trickles down to it's the bank's preference or the bank's appetite. So each bank has their own appetite. Each bank has what they like, what they don't like. Like I said in the beginning, we don't do restaurants. We don't do gas stations. I know tons of lenders who do. I know lenders who, we love restaurants, so there's so many extremes out there. Definitely want to talk to a few lenders and get your questions answered about process, which I feel like we've touched on a little bit here. And then what they look for, what they like. And then I, at the end of that conversation, kind of explain our process, explain who I am, what my bank does, what we're all about. I ask them for all the questions they have. And then at the end, I say, great. So here's what I usually do. I'm going to send you a list of everything my bank requires. And once you feel like you're at a point where you need to start jumping on that, then, please reach out to me with any more questions or let's start going. I definitely feel they can save themselves a lot of headache by engaging early on in the lending process to find out, to kind of know what to expect.
Yeah, that's a great recommendation. At least, learn the process, understand it, and then maybe even find out what they're qualified for, right? So when the businesses.
Yeah, and that's, in fact, Holly, that's a great point because, again, it's people, they know it's out there. They know the SBA it helps people buy businesses, but there are things that are just like, just not going to work. If you only have, $100,000 and you're looking at $2 million companies and you have no other way of getting more than $100,000, then keep your dream alive of buying a business, but either find partners, find family members, or, start looking more in that $500,000 range. I'll work on deals, and at the end of the day, I'm scratching my head going, wow, this is a $2 million deal, but you're only going to make, like 20 grand. So,
Yeah.
if everything stays the same, then I'll look at $500,000 deals like, wow, if this guy doesn't buy it, I'm buying this thing because there's so much,
Yeah.
so, so it really comes down to me. It comes like, there's a lot of like borrowers who are my experienced borrowers. Well, there's two ways they do it. I have certain borrowers that like, I've always wanted to own this in this industry. I've always wanted to do this, or this is where my experience is. I love cars. I'm a mechanic. My dad was a mechanic. I want to buy this auto body shop or whatever. And so boom, that's what they're focusing on industry and dreams of owning something in particular. That happens a lot in the restaurant industry, by the way. Everybody, I always wanted to own a restaurant.
I get that a lot too.
Yeah. But then there's other people, they're like, man, I know my skill level. I can run anything. Pretty much anything, I'm looking at that bottom line. If there's enough room in there for me to make good money, decent money, that's, I'll see if that matches or it fits me. But yeah, the one of the things is you need to have some money for injection and even some post-closing liquidity, because banks really don't like if you have $100,000, they don't want you to put $100,000 into a business and cross your fingers that you don't need any more money. So you kind of want to range it like, I have $100,000. Let me look from 400,000 up to 700,000 for a business, and I'll have a little money left over just for the safety net, little things like that. And don't get me wrong, that's just kind of, because there's also other things like if somebody has 20 years of experience in an industry and they might not have a ton of cash, well, the bank might be like, hey, you're going to be fine. You have so much experience. So everything's kind of how it all fits together and what weaknesses or what strengths can overcome these weaknesses, and so it's not an exact science, but it definitely, you also don't want to waste your own time by looking at, I really like this $5 million business. How much money do you have? Well, I got 50 grand, so.
That's great to know. Just at the end of the day, I guess it sounds like the advice is just be realistic and
yes,
what you're and make sure that working capital is important, right? That reserve is important.
Yes. Yeah. Post-closing liquidity is a big one. It's not required, but it is required. It's like banks, it's really tough for a bank to feel comfortable if after the transaction's done, you just don't have a lot of money left over. It's a little scary. I mean, don't get me wrong, almost every loan, they're going to put some working capital in there in the loan, but they also really want to see you to have a little bit of personal strength as well, just for kind of a safety net.
Yeah, and I want to highlight that safety net, especially having Lance likes to talk his fancy banking talk, post liquidity. I just call that a cushion.
Yeah.
Yes.
Most of the Main Street transactions, buyers only buy a business once. So most of the buyers, most of you guys, if you're looking at businesses out there, you've never run a business before, and mistakes are going to be made, and mistakes are fine as long as you learn from that. But everybody's going to make certain mistakes, and sometimes it's going to involve money. So having that cushion beyond the working capital that a bank calculates is always a good idea. So, don't bite off more than you can chew. And, if you buy a smaller business and you run it effectively, we can help you buy additional businesses even faster. So, have that liquidity, stay in the scope that you can afford for right now, but I can't emphasize having that cushion, that cash cushion enough. Some people may never need it, but a lot of people kind of dip into it.
Yeah, that's great. And a couple of things, Jonathan, just to touch on what you just said. Number one, banks, just like you, we love a great borrower. We love somebody who we because technically banks are taking chance on certain people, when they lend to them. We love them coming back saying, hey, I've owned it for X amount of time. We look at their financials, they're killing it. It's like, let me help you buy the next one. That we love them just like you would love a repeat borrower or buyer for another business. And that happens a lot. I mean, I have several people I've gotten 2 or 3 businesses for, and it's awesome. And I feel, I've helped them build this empire. And then the other thing to touch on what you said was the scary side, the flip side, the scary side is I have had deals where somebody 6 months into it, they're like, hey man, I need some more money. And I'm like, the loan's closed, it's done. We don't reopen, this is what you should have planned out. You should have really thought, taking a little more time to think through what's this going to look like in 6 months? Am I going to have a cash flow issue? Because you just can't reopen it, and banks aren't going to be like, oh, well, let's throw more money at something that sounds like it's a little tight. They're just not going to do that.
In that instance, would they be able to qualify for like an equity line or a line of credit of some sort? Or
I do. There's tons of other products, as you know, out there for stuff like that. And yes, so there is some other stuff out there. And as long as they're not losing money, it's just they're just have a cash flow tightness, meaning, they're going to get the money. They just don't have it today, and they need it. Yes, there's absolutely other options out there. But it's not as easy as had you just planned a little better in the beginning with the loan. Maybe you asked for 20,000 more in working capital, because like I said, we put working capital into all these loans, but it's easiest to get that working capital at a really good number when somebody's really looked at how they're going to navigate the first 3-4 months.
Yeah. And it sounds like, more importantly, seeking that expert guidance, to understand, approach and process it methodically. That's what it sounds like. So,
again, part of like really doing those projections really hard too, like not just trying to, check a box,
Absolutely. Well, Lance, thank you so much. This is like, you are a wealth of knowledge and great insights to our buyers and sellers out there. And thank you for sharing that today. To our listeners out there, if you're considering a business acquisition, remember that understanding the SBA process, as we've been talking about, I think we overdid it, but I think the reason why we did it is very important, right? It is critical. Yes. But don't hesitate to reach out to professionals like Lance here, who can guide you through the journey. So Lance, somebody wanted to get a hold of you. How did they get a hold of you?
Well, I'm on LinkedIn also. When we have a really good website, United Midwest Savings Bank. If you Google them, I come up as one of the SBA lenders. Love to talk to you. Give me a call. Be more than happy to work with you. But I'm definitely on that page. I think it has my email address and phone number. So yeah, thank you so much. I'll have to tell my kids that you said I was a wealth of knowledge. They will not agree with that, or they'll be surprised. So.
Are they
give it time. They'll realize how smart you are once they have kids of their own.
Yeah.
Well, thank you guys so much. This was great. Thank you.